Welcome to Iron Financial, the show where we forge stronger portfolios by putting the market's biggest promises under a white-hot stress test. Today, we are putting the full weight of our analysis on a company called NPWR, ticker NPW. Now, they're not just selling a product. They're selling the blueprint for the holy grail of energy, zero-emission power on demand. A fortress, they say, built to power the entire AI revolution. Market skeptic. Yeah, a fortress is a great story. But you know what? The market has taken a sledgehammer to this stock. It's down over 70%. So our job today is to figure out if this fortress is actually being built or if it's just a really expensive facade that's about to come crumbling down. Let's get into it.
And really, this one slide tells you the whole story. On the left, you've got this grand, beautiful blueprint, right? This tech that's supposed to change the world. And then on the right, you have the cold, hard, brutal reality. A stock that is literally vaporized almost 3/4 of its value, and maybe even worse, the people who should know the most about the company, the insiders, they're quietly heading for the exits and cashing out.
Right, and that is the absolute core tension we're looking at. Is the market just completely blind to a generational opportunity here, creating a huge discount for savvy investors? Or is it correctly pricing in a fatal flaw that the bulls are just choosing to ignore? That's the question we're here to answer.
Okay, here's how we're going to attack this. First, we're going to inspect the blueprint itself, the technology, the story, everything that attracted so much money in the first place.
Then we're putting on our hard hats and we are going to start looking for the cracks in that foundation, the operational red flags.
After that, it's time for the numbers. We run them through a brutal financial stress test. No stories, just the raw data.
And then we'll do what you always have to do, follow the money. Are the insiders buying this dip or are they sprinting for the exits?
And finally, we will weigh all of the evidence and forge our final verdict. Let's get started by building out the bull case.
All right, so to really get the bull case here, you have to understand the sheer scale of what NPWR is trying to do. This is not some small incremental improvement, okay? They're not building a slightly better solar panel. They are trying to forge an entirely new path, a new category in energy generation.
And this new path, they claim, solves the single biggest problem in energy today, and that is, how do you get reliable 24/7 power, what the pros call baseload, without spewing carbon into the atmosphere? It's a question worth trillions of dollars.
Okay, so at the absolute heart of the bull case is this technology, the NPWR cycle. Now, forget the technical name for a minute. Here's what you need to know. It takes natural gas, but instead of burning it with regular air, it burns it in a closed loop with pure oxygen and CO2.
So, what's the big deal? What's the magic trick?
The magic is that the process itself inherently captures all of the carbon dioxide as part of the cycle. There's no separate, massive, super expensive capture system bolted onto the side of a plant like you see with other technologies. The capture is baked right in. So you get the rock-solid, on-demand reliability of natural gas with pretty much zero emissions. That is the revolutionary promise that this whole investment is built on.
Okay, so a revolutionary idea is one thing. We see those blow up on the launch pad every single day. But what about actually building it? Who's going to pull this off in the real world?
This is where the bulls point to the first huge pillar supporting this whole thing, their partnership with Occidental Petroleum, or Oxy. And look, this isn't just Oxy writing a passive check. They are providing the actual land for the first commercial plant in the Permian Basin. They're bringing decades of operational know-how, and this is crucial, world-class expertise in handling and sequestering CO2. Oxy is supposed to be the bedrock that Project Permian is built on.
But a good foundation needs more than just one pillar to be stable, right? So NPWR also brought in some absolute heavy hitters. You've got Baker Hughes, a true titan in energy technology. They're the ones designing and building the specialized turbine, the beating heart of this entire system. That brings an enormous amount of engineering credibility to the project.
So you're saying they have the engineering muscle. Fine. But who's going to buy the power? You can't just build it and hope they come.
And that's where Constellation comes into the picture. They're one of the biggest power producers in the entire country. They provide that vital connection to the utility market. When you look at it on paper, it's an absolute dream team. It's designed to de-risk what is a gigantic execution challenge. And believe me, that's a very powerful story to sell to Wall Street.
So, if they can actually pull it off and build this thing, the market's there? The market isn't just there, it's absolutely immense, and it's growing like crazy. We're talking traditional grid power, heavy industrial stuff like steel plants, new sectors like green hydrogen. But let's be honest, the real rocket fuel here, the market that has every investor leaning in, is data centers. The AI boom is creating this insatiable, almost vertical demand for electricity. And these facilities, they need three things: clean power,
24/7 reliability, and a lot of it. Net Power positions itself as basically the only technology that can check all three of those boxes.
And of course, to build this kind of future, you need capital. You need a war chest. And as of their last filing, Net Power has about $379 million in cash and investments sitting on the balance sheet.
So the bulls are looking at this and thinking, okay, that's the fuel. That's what's going to get them to building the first plant and bridge that gap to commercial operations. You've got a strong blueprint, powerful partners, a huge market, and the cash to make it real. I mean, what could possibly go wrong?
Well, as it turns out, a lot. A lot can go wrong. A blueprint is only as good as the builders who execute it, and a story is only good until it hits reality. So now, we're going to put on our hard hats and we're going to go looking for the stress fractures in this foundation. It is incredibly easy to sell a vision in a PowerPoint deck. It's a whole lot harder to build it on time and on budget in the messy real world. Let's see if this structure can take the pressure.
And the first, most glaring crack you see is right here, the timeline. The original plan was crystal clear. Their flagship plant, Project Permian, was supposed to be up and running, generating power by 2027 or 2028. But then, after they finished the initial engineering and design phase, well, the story changed.
And it changed in a big way. The company suddenly pushed the guidance back. Now operations will begin, and I'm quoting, no earlier than 2029. In the world of these massive, capital-intensive projects, that's not just a minor slip. That's a huge delay on your #1 project, and it immediately begs the question, why?
And the great thing is, you don't even have to guess. The company tells you exactly why, right in their own 10K filing. This isn't media spin, it's a legal disclosure. I'm just going to read it straight up. Initial cost estimates were higher than originally anticipated. For a first-of-its-kind project that is banking its entire future on being economically viable, that phrase right there is a 5-alarm fire.
So let's translate that from corporate speak into plain English. It means it's way, way more expensive to build than they told investors it would be. And this forces them to go back to the drawing board for something they call value engineering, which is just a fancy way of saying, we have to find a way to make this cheaper or the entire project is going to be a total bust.
And this right here is the question that every single investor or potential investor has to be asking themselves right now. Is this just a normal hiccup? You know, the kind of thing you'd expect in a complex, groundbreaking project like this?
Or, and this is the scary part, does this delay, which we know is being driven by these massive cost overruns, point to a fundamental, maybe even fatal flaw in the economics of this technology at scale? Because look, if you can't build it economically, it doesn't matter how revolutionary the blueprint is. It just becomes a very, very expensive science experiment that shareholders are paying for.
And that leads us right to the numbers. The story is one thing, but at the end of the day, the financials are the ultimate judge, jury, and executioner. A strong structure has to be supported by solid figures. So right now, we're going to apply maximum financial pressure to Net Power statements and see if they buckle or if they hold up. Let's start the stress test.
All right, let's see if this foundation is built on solid concrete, or if it's just sand.
So the stress test kicks off with performance versus expectations. And what you're looking at here isn't just one bad quarter. No, it's a clear, established pattern of completely failing to meet expectations. Just look at the table. Quarter after quarter after quarter, they miss their earnings per share estimates, and we're not talking by a little bit.
And look at how the market reacts. After that Q4 miss, the stock just gets obliterated, down over 32%. But honestly, the real shocker is the most recent quarter.
It's an absolute jaw-dropper. Analysts expected a loss of 16 cents a share. The company came back and delivered an actual loss of $5.28 a share. That's not a miss. That is a complete and total failure of financial forecasting and control. And what that signals to the market is that cash is burning far, far faster than anybody on the outside even realizes.
So you see this pattern of massive misses. What does that all add up to in the end? It adds up to this number, a net income loss of over $593 million. Just let that number sink in for a second. This is not some tiny startup burning through a bit of venture capital. This is a public company that has lit more than $500 million of shareholder money on fire, and they still haven't even broken ground on their first commercial plant. This is a catastrophic burn rate, and it puts enormous pressure on that $379 million cash pile we talked about earlier.
All right, now let's talk about efficiency. There's a metric called return on equity, or ROE. It's simple. How well does a company use its shareholders' money to make more money? A healthy company has a positive ROE. Net Power's ROE is negative 121%.
Okay, that sounds really bad.
But what does it actually mean?
It means that for every single dollar of shareholder equity they have on their books, the company is actively losing more than $1. It's not just that they're failing to generate a return, they're systematically destroying their own capital base at a truly alarming rate.
Okay, so they're losing a ton of money. They're wildly inefficient with the capital they have, but surely they're bringing some money in the door, right? Anything? And here we go. This is the single most damning number on the page. After $500 million has gone up in smoke, after all the big-name partners and all the promises, the company's total revenue is zero. A big, fat nothing. They are a pre-revenue story stock, and the story is starting to completely unravel. All that cash burned, their main project delayed, and they still haven't sold a single kilowatt-hour of electricity. The entire valuation is pure hope on a future that keeps getting further away and a heck of a lot more expensive.
This absolutely abysmal financial performance, as you'd expect, leads directly to this chart. And this is a perfect picture of pure shareholder value destruction. The market has rendered its verdict, and it has crushed this stock by over 72% from its high. Yeah, this is not a healthy correction. This isn't just some profit taking. This is the market screaming at the top of its lungs that it does not believe this blueprint can be built on such a crumbling, unstable financial foundation. The stress test is showing deep, systemic weaknesses everywhere we look.
So, if the financials are this bad, it forces you to ask maybe the most important question of all. What are the insiders doing? You know, the executives, the board members, the people who have the most information. Are they doubling down? Are they buying what they think is a historic discounted opportunity?
Or are they quietly taking apart their own positions and running for the exits? Let's follow the money.
And the money is flowing in one direction, and one direction only, out. In just the last 3 months, insiders have sold about $5.2 million worth of their stock. And this isn't just some one-off nervous executive. 8 Rivers Capital, one of the key early shareholders, has been consistently selling off shares. But the sale that's most telling, at least for me, is the COO, Brian Allen. This is the man whose entire job is to oversee building these projects. He has set up a pre-scheduled plan to systematically sell off tens of thousands of his shares. The optics of that are just, they're terrible. The guys who are supposed to be building the fortress are selling off their own bricks. And this selling becomes even more concerning when you zoom out and look at the total ownership breakdown. Insiders as a whole own just 8.6% of this company. For a company at this early stage, that is not a lot of skin in the game to begin with. And as we just saw, they are actively working to reduce even that small stake. You just have to ask yourself a simple question. If you truly believed that your company was a revolutionary, world-changing opportunity that was trading at a 72% discount, would you be selling, or would you be mortgaging your house to buy every single share you could possibly get your hands on? Their actions are screaming a profound lack of confidence in the very blueprint they're asking the public to fund. And all of that brings us right here, to our final verdict. We've looked at the ambitious blueprint, and we've put the crumbling foundation under extreme pressure. Now it's time to put it all on the scales.
We need to weigh the few strengths that are left against what seems like an overwhelming pile of weaknesses to figure out if Net Power is a deep value opportunity or if it's just a classic value trap waiting to spring shut.
So here it is, the final balance sheet. On the left side, you've got the pillars that are still standing, the promise of the technology. I mean, if it actually works, it's still world-changing. The blue-chip partners, Oxy, Baker Hughes, they're still at the table, and that does lend some credibility. And of course, they still have that $379 million war chest. Those are real, tangible strengths.
But then you look at the other side of the ledger, and the structural weaknesses are not just severe, they're multiplying. You've got major project delays that are directly tied to cost overruns. You have catastrophic financial losses with zero revenue to back them up. You have a clear, consistent pattern of insider selling. And of course, a stock price that reflects a complete and total collapse in market confidence. The weight on this side of the scale is just immense.
At the end of the day, this entire thing comes down to one final critical question. That $379 million lifeline, is it enough capital to actually build the future of energy? Or is it just enough cash to prolong the collapse, to burn through what's left of shareholder money on a business model that might be fundamentally flawed?
The blueprint is beautiful, no doubt, but the financial reality is incredibly harsh. The choice for any investor now is whether you believe that money can be used to repair the deep and growing cracks in this foundation, or if it's just buying a first-class ticket on a sinking ship. Your answer to that question determines if Net Power is a fortress or just a facade.
Quick disclaimer, everything I share is for entertainment and informational purposes only. I'm not a financial advisor, so please do your own research or talk to a professional before making any moves with your money.